that, we'll move on to our next fireside chat. And this is one that focuses on the financial backbone of the economy, ladies and gentlemen. The session is aptly titled, I believe, The Strategic Role of Banking in Powering India. And to lead this conversation, may I please invite back on stage my colleague and senior news editor with the Times Network, Sumit Lakhutia. Huge round of applause for him, please. And joining him in this discussion, Managing Director and CEO of Axis Bank, Amitabh Chaudhry. Let's have it for Amitabh Chaudhry, ladies and gentlemen. All right, gentlemen, it's over to you. Sumit, the floor is yours.
Thank you, Pooja. Thank you, Mr. Chaudhary, for joining us here this afternoon. Just starting off on a trot, Pooja said, our topic is about the strategic importance of banking in the growth. The economy slated to grow at great numbers. We're moving towards $10 trillion economy. That's our long-term ambition. Obviously, bank's role is very important because everything somewhere is connected, goes down to the banking industry. How are you seeing the banking industry? How should it, level up its game or just be prepared for this requirement, the load that will be coming on the banking industry as the economy grows?
Well, obviously the government is very, very focused on reaching their goals of Viksit Bharat by 2047, and that means that the economy has to grow at a certain rate, what is happening in the Gulf notwithstanding, and that means that the banking system has to support this economy. Yes. Otherwise, how will the economy get to this growth rate? Now, if you look at the financial services industry as it stands today, and if I just focus on banks, since you asked about the banks, they are in pink of health in the sense that if you look at, have they been able to support the credit growth till now? Yes. The gross NPLs, net NPLs, the provision coverage ratios are perhaps the best that have been seen over the last 10 years. Not only that, the return on assets has also improved. So if you look at some of the data which I saw recently, in 24-25, the scheduled commercial banks in India made close to 4 lakh crores of profit. Now, even if obviously some of it was given away as dividends, even if the capital formation additional net worth was close to 3 lakh crores, and you leverage that, 7 times, 8 times, the capacity of and this is without raising any additional capital, the capacity of the banking system to support a credit growth of a certain nature is quite solid, right? So we are at about estimated to be 185 lakh crores. You add 15% to it, the banking system can support it. That's not a problem. But it's not just about capital. Ultimately, you need to have the processes, the technology, the people capability to also support it. And I think since the times have been good, the banks and the regulator has been pushing the banks to invest in infrastructure, to invest in cybersecurity, to invest in people on a consistent basis. So the banks themselves have been doing it, and obviously the regulator has been pushing this case also along. So from that perspective also, I think today at least, the banks are in a situation to support it. And then to that, you add the NBFC, which is a very thriving sector. RBI has promoted the NBFC sector. A lot of NBFCs are in play. They have grown in size. They're growing faster than the banking industry. And they're kind of acting as the second bulwark to support this credit growth. Yes. And then you have these long-term financial institutions which have also come about recently. NAPFED, they have created some of the other investment funds which are investing in NIFs and players of that nature. We have IRFC, RSC, which are also playing a big role, NABARD, etc., etc. So they also are there to support some of this credit growth and take some long-term bets on investments which are happening in infrastructure and things of that nature. So my belief is that is the financial system of India in a position where it can support the kind of growth which is expected, given our ambitions on the economy? Yes, I think it is prepared.
Fantastic, because you spoke about the NBFC sector, because also that is so important, especially in the rural areas where there is so much of unorganized credit for them to be able to start building their credit history, so to say. The other concern that often businesses have is, of course, being lent to. So corporates, the big corporates, not so much of issue, but the small guys, the MSMEs, the small businesses who might not even have presence in metros. How are you seeing it play out for those small businesses to easily be able to get credit? I know the government is also putting in schemes, but how are you seeing it from where you sit?
So when you look at it from a strategic perspective for any financial institution, The typical stuff which you're used to doing is not giving the kind of returns which you want, because the good corporates are under leveraged. They're themselves generating a lot of operating cash flow. They're not borrowing as much as before. The private capex has also not picked up to that extent. And if you're a good corporate, you're getting rates where the risk-adjusted return for a bank is just not good enough. Now, you can provide a lot of services around it, but you also need to find borrowers where you're taking a little bit more risk, or you're underwriting risk very differently, where you can get a paid more. There you are taking the risk, so you potentially can get the right return for it also. Which basically means that if you look at the growth in lending to MSME sector, if you look at how the banks have utilized some of these schemes which government has launched and built on top of it, when you look at some of the public infrastructure platforms that have been created by the government, be it UPI, be it account aggregator, be it the United Lending Interface they're talking about, all of that is basically driving and giving a platform to MSME to find more sources of finance. We, example, for an Axis Bank, also own a platform called A-Trades, which does trade financing. They're doing about 10,000 crores of discounting on that platform. It's all automatic. And there are 62 financiers there on that platform. And MSMEs are obviously able to see the rate which is coming from 62 financiers and get the benefit of it. Obviously, they're supplying to a corporate whose risk the banks are willing to take. So a lot more platforms have opened up. But I do believe that as disintermediation happens with this public infrastructure, banks do need to go and address this. They are finding ways of using pseudo things like, the GST returns, the cash flow, looking at how else can I underwrite a MSME risk rather than just relying on the typical ways of what we used to do earlier. So it's work in process. I'm not saying that, all of us are out there. NBFCs, some of the NBFCs are very specialized in looking at this area, but it's an emerging, space. And frankly, from a strategic choice perspective, there is no choice. We have to go there.
So we spoke about business side, the MSMEs. Now I'd like to go towards the retail consumer. With NBFCs also, now there is so much of credit so easily available. You want to buy a phone, you want to buy an AC, you'll get credit for it. Do you feel that maybe it's being over leveraged? Do you feel that too many people are taking too much credit, which could somewhere make the system a bit unstable?
So we went through a retail cycle where what actually happened was that people over-leveraged themselves or leveraged themselves too rapidly. The system could not detect it, and obviously we had a bit of a crisis. But if you look at, again, a macro data, if you look at retail credit to GDP, India is still way lower than, say, where China, Japan, some of the developed economies are, or where, say, Thailand or Malaysia is. We are in the 45, 47% range. China is at 60%. Now, if you look at current GDP, 345 lakh crores, and you add 10% of more retail credit to it, it's a pretty large number. I think India is still under-leveraged at one level in comparison to what kind of retail lending is happening in the other markets. Please also understand and appreciate that Indians don't borrow as easily also. Yeah. To give you a sense, US consumers have $1 trillion of outstanding on their credit cards. India is some piddly sum, and it is not growing. So I'm not saying people should borrow on credit cards. I'm just giving the fact that Indian consumers are a little bit more careful. Yeah. So the fact that retail credit is growing is not a bad thing. Yes, obviously as lenders, people who are taking risks, it's very, very important that we measure the risk out there very clearly and very deliberately. Now, I'll give you, just extend this logic a little bit. We have this war which is happening. There is second, third, fourth order impact which could happen if this war goes on slightly longer than we expect. It has gone longer than we were expecting. It would have some risks which will play out. And some of those risks could potentially play out in the consumer side also. Same for AI. All of us are talking about the job losses, etc., which will happen in AI. No one knows how much of job losses will happen. We have some idea in which sectors will happen. We don't know the extent of it. We don't know the extent to which people will get redeployed. There is risk which you can see is coming up sometime in the horizon. Yeah. So as banks, obviously we are looking at that risk and saying how will we assess it, how will we react to it, what will we do about it. Now, if you don't react to that emerging risk and keep lending, you will have a problem. But you need to watch that risk, you need to assess that risk, and you need to take some action around the risk in time, so that this risk doesn't play out at least on your institution. So we are in the risk-taking business, but as I was saying to someone, we also need to watch our risk very, very carefully. And you need to keep finding the right balance as we go along. And world is too volatile, changing too rapidly, so you need to watch it much more closely than before. So everyone is watching.
I like how you said you're in the risk-taking, risk-managing business because, yeah, I mean, that's what it is, but people usually don't look at it from that angle. Continuing with our conversation on retail investors, do you see the need for branches anymore? When we talk about online banking, I'm sure pretty much everyone here has, if not more than one, at least one banking app on their phone. How are you tackling this change?
So, let me take an example of Axis Bank and then we kind of expand the answer. We are still opening 400 to 500 branches every year and that would seem to indicate that, oh, you still need branches and that branch expansion is the way to go. The reason we are setting up these branches and some of the other banks are doing it is because new pockets of residences or where you don't have a presence are emerging, which are displaying signs of wealth, where the expectation of the customer is that I might not ever enter your branch, but I want to see that branch there, which will create the trust in me that yes, you are there. Secondly, if I need you, hopefully I don't need you, if I need you, I can walk through that door. So the nature of the branch will change. It might not happen in a hurry that you will stop opening branches. So as I was sharing with you outside,
yes.
We are doing a couple of things there. One is that today we have brought a branch down to a desk. So in that desk, you can open, we have a couple of PC screens, you can open an account. Standing on the other side, there's only one person required. We can issue a debit card from that desk. There is an ATM machine attached to that desk. So most of the services, which you would need in a typical branch, it doesn't have a locker obviously, but most of the services can be provided from that particular desk. You need 150 square feet at best to set up a branch of that nature. So we are reducing the, the size of the branch. We are reducing what we do, we are changing what we do in the branch. It's becoming more and more of a sales outlet rather than servicing outlet because all the servicing can be done using the app you mentioned. So we are experimenting it. We already opened one in one of the IIMs and the demand which we are getting from various institutions is quite high. No, because giving 150 square feet is not very difficult. Giving a larger space is more difficult. We are also going to experiment very soon, and from Axis Bank you will hear it. We are going to open branches which might have only lockers, and they will have the latest technology there. So it will be a locker-only branch, because we believe that in a lot of the residential areas or where large complexes exist, the customers are looking for a locker in that vicinity. They frankly don't need obviously we'll have people who can provide all the services, but almost the entire premises will be used for lockers. So we're going to experiment with that also and see how that pans out. Because as we ask the customer what they need the branch for, is the door, is the presence, and locker. That's all they need for, because Indians are still buying a lot of jewelry, gold, whatever valuable they have, and they want to keep it somewhere.
No, I've even heard of people how they've started putting, say, the documents, the property that they own, the documents are being put in the locker as opposed to just keeping it at home. Just a funny note, I just want to take a sidestep, and I was reading this book called, I think it's Anxious People by Frederick Backman, and in that, I think it was in that only where this guy goes in to rob a bank, and the bank's like, this was in Sweden, I think, and the bank's like, well, we don't have any cash. It's a digital-only bank, so I can't give you anything. Jokes aside, I want to come to a very serious point that you also touched upon. You spoke about trust. Currently, the scenario that we're here, it's in the news for the last few days. We all know about it. A bank is a lot of people, before putting in money, they put their trust in that bank. How do you see the current scenario? How should banks be working, the banking ecosystem as such, to keep the trust of those customers, because that's what they want first before a big bank or a small bank or a gold credit card or a silver credit card?
So obviously all the institutions who are working in the financial services industry realize that the trust is the foundation of what we stand for. We are the most leveraged companies in the world. If you look at our leverage, we leverage it 7 to 8 times. So if we cannot carry and have that trust of our customers, we'll have a problem. So all the boards, the regulators, the management teams work very hard to ensure that that trust is maintained, it is creditably maintained, and it is sustained over a long period of time. Now, that does not take away the fact that once in a while, you do run into situations where things of a certain nature happen, which obviously the market does not like or does not respond to. I think that does not mean that everything is wrong. That does not mean that the governance standards are completely lacking. There are cases, times when there are differences, and differences when they persist for a long period of time, some of these things can happen. That does not mean that governance was non-existent. That does not mean that enough governance mechanisms don't exist. It does not mean that the regulator has not gone and looked at those governance standards and kind of satisfied themselves that yes, they are there. And please understand that the boards of most of these institutions have people who have done very well in their lives. They have a reputation to protect. They're not just sitting there, frankly, they don't get paid enough. They're not sitting there for something to happen. Right. They are on top of the game. They want to ensure that the institutions they're part of the boards of are, continue to represent a certain level of governance which people cannot question. So, we have to give them some credit. I mean, obviously there is some news out there, but my belief is that generally the institutions work very, very hard, and the boards are very, very conscious of the fact that trust, the level of governance, frameworks to maintain those level of governance, constant checking, continue to add controls is all in place, and it's an evolving framework. It's not that once you set it up, it's all okay. You have to keep, depending on what you see around, you keep adding to it, so that, the trust never breaks.
Mr. Chaudhary, one last question to you. Going ahead, since we're talking about the strategic role of banking in the growth of the economy, the role that fintechs will play in this, are they going to be competitors of banks or co-partners of banks?
So we have about 10,000 fintechs. Let me just give you some statistics on Axis Bank, and then I'll tell you. Today, Axis Bank is working with 50% of fintechs which have got Series A and above funding. 80% of unicorns and fintechs are actually using Axis Bank as a primary bank. Today, the pipes we provide for shifting of money, we own 40% of NEFT market, we own 30% of IMPS market, we have 20% share of the Bharat Bill payment system. So we are very large on the payment side also. We have 450 APIs to support some of these fintechs. We have created a separate platform to ensure that they can get these transactions done. Now let me come to the fintechs themselves. See, they are, the reason they exist and they come into force is because they're looking at a revenue pool of the financial services system and saying, I can attack it. Maybe because it's inefficient, because the charges are too high, or I can provide a customer journey, or I can go and attack some customers which the banks are not looking at. So they are finding these white spaces and attacking. Now, from our perspective, we can do a couple of things. One, we need to become more agile so that we don't allow them to come in. Second, in many cases, we cannot attack it, so partner with them. In third cases, they're themselves going to become very big and become their banking partners. And I think all the institutions are doing all three. But the biggest thing we have to do is at least have parts of the bank which behave like a fintech themselves. That's the only way we will ensure that there is a moat and they will find it tough to come inside and attack us. But that's part of an evolving competitive landscape. I think it makes us better. So it's good for the industry overall. And please note that a lot of these fintechs, after being successful in India, have started looking outside of India also, because they're finding markets where, given all the public infrastructure that has been created, given what they've done in India and size of the market in India, they can easily go and acquire companies outside of India and become more of a multinational player rather than just an Indian player. So we are with them. We believe a very essential element of what's happening in financial services system.
Fantastic. So going hand in hand to keep the growth going. Absolutely. Thank you so much, Mr. Chaudhary, for your time and for sharing your insights. Ladies and gentlemen, round of applause.
Thank you so much. That made for